Good morning. It's April 27th. It's 8:31 a.m. Eastern Time. I'm Rich Paz for Critical Point. This is an audio update on the stock market. Tomorrow I will be out of the office. I may put out an audio update in the morning, but there won't be a video update unless I decide to do something at the end of the day. And it may only be another audio update, and it may only occur if we have some very volatile markets and the model is triggering some alerts. So otherwise, out of the office tomorrow, back to normal schedule on Thursday. Okay, for the stock market, looking today into next week, the model is suggesting a level 3 top can occur tomorrow on into next week. So we're looking for an additional 1 to 5 days of buyers pushing this market higher. Now, the problem is the market acts a little lethargic to me right now. It did punch through to a new record high last night in the S&P 500 E-mini futures, the June contract. And we'll have to see if cash is willing to follow that. But it's kind of like we had a good slug of buying for about 1 day and then it's kind of slowed down. Some of that may be due to earnings season. And I think for the moment the market likes what it's seeing in their earnings. But I don't think we've hit peak earnings yet. I think it's by next week that we'll have only a few earnings left that are coming out. So it may take a few days to really see this. It's possible they're going to get comfortable at some point here and we'll see this trend speed higher. And I'd like to see that. If we can get a surge that provides us a little bit of a safety net over the next 2 or 3 weeks when we're going to get another level 3 downtrend, that unfortunately could be the true level 2 downtrend or a final phase of a broken up, choppy level 2 downtrend that began last week. In other words, if we can get this higher, there's a good chance it won't take out last week's low. There's a good chance it's not going any lower than 4,100. But I have to warn you, there could be some things going wrong that the market may go all the way down to about 4,000 before it goes higher. So there's a lot of mixed model forecasts coming out. And the reason is the model is picking up that the level 2 trader can't make up their mind what they're doing. It's time for them to sell. It's time to cause the biggest correction from the February low into a top probably in June. And that's how it would normally work. But this time around, they're kind of broken up. They don't have the conviction. They started selling last week, changed their mind last week into this week. Now, will they flip back again and only put it down some, or can they put it down quite a bit? And will the larger, more important level 1 trader facilitate that, go along with it, or will they act like a sponge and soak up that selling that will limit the downside? And then, of course, the level 3 trader, how aggressive will they be? Because they've really not done much selling for a very long time here. I think they're probably due to cause larger declines from time to time now into next year, okay? That would be normal behavior as well. So these trends don't have to stay as bullish now. We've got things high enough that it can be slower paced growth and expansion and slower paced slower pace of rising price into next year. Nevertheless, we have objectives of the upper 4,200s on up to 4,500, so that fits within our long-term range into next year of 4,300 to 4,600 for the S&P 500. Looks like it's on track, looks like it's working. But the key is, if this market wants to top right here, if it can't do any better than this, what kind of downside will we get by next week? And it's just very debatable. There's just too many scenarios. Some saying quite a bit of downside. Some saying no downside. May work, may not work. It's just a tricky time right now. And it's because that level 2 trader can't get on the same page and get convicted enough. And I think the reason is we're still in a bull market. I think get this earnings out of the way, they might feel more comfortable. Well, we'll see. Maybe they'll instead decide to take some profit. But anyway, zooming out, however, I still feel comfortable being focused on the idea the trend is up from February 1 low to a top probably in June, maybe as late as July. And that will be a level 1 top, and we're probably then going to get a 3 to 10% setbacks, one of the better corrections of the year, only to see it be bullish into the fourth quarter of this year, to fit inside a long-term bull market into next year with maybe a 10% or more setback next year, to then just be bullish again into 2024, and all this fits into a long-term bull market this decade. That's how all the twists and turns are going to come according to our roadmap. Now, I want to briefly, hopefully make it brief, I want to discuss some of this long-term overvaluation stuff, because I noticed even Jim Cramer was saying on CNBC, it looks like all this talk downside here. It's just not really there. We just don't have the right stuff. And I think he feels like, yeah, the market's going to go higher somehow, some way. I agree. Okay, I'm quite confident of it, but we can get these twists and turns that sometimes can surprise us and be a bit nasty, and then it just goes to a new record high. What I want to talk about is a lot of people think we got a 1929 crash coming, and they think you at least ought to have a nice little bear market coming, and they use all these overvaluation studies, some of them going all the way back to 1929, some of them only going back a decade or two. Just depends what metrics they're using, how long-term are they. But here's the interesting thing. I think if you have overvaluation studies warning that this market is just nuts, that it's got to crash, it should have never come this high, it should have never been this bullish, you need to look to see if can you reset those indicators to 2008, 2009 for the super cycle drop, the crash, and then and or set it to 2020 to 2021 for that major long-term business cycle and recession, okay, and the virus recession. And the reason to do this, and if you can't do this, maybe find new indicators that will do this. The reason is I think the business cycle model is more correct than any valuation formula I've ever seen, okay? And the business cycle is saying you got to be bullish into near the end of this decade, at least into 2026, which is the lowest probability for the earliest of tops. But say into the end of this decade, what's going to make that happen? And can your indicators just get more overvalued to the end of this decade? And if so, I think you need to consider that and dial that in so you don't become too bearish and fight this market too much, too often. All right? And maybe you find with these resets, you know what? This market really isn't overvalued. And I think we're so early in the business cycle, this market is not overvalued. Now, I'll have moments of looking that way and being overbought technically, but that's just going to cause some of these twists and turns along the way, little drops, but it won't cause any kind of a major long-term bear market. I think I'm really onto something that is kind of the time to ignore some of this stuff and assume it can be more overvalued. And one of the underlying reasons for this is we're also in super cycle bull markets that are incredibly strong. So that's going to increase the odds of being wrong if you're betting against the bulls. But it's also in the late stage of a super cycle when it would be that strongest. But it also would be a sign of maybe it's overvalued, but you know what? It could be overvalued for another 1 or 2 decades. It can at least be overvalued to near the end of this decade. So dial that in, give that some consideration here if you're looking over your shoulder at some of this very bearish stuff here. I think it's just going to cause problems for people, and they're going to wind up losing money or missing out, have an opportunity cost. This is a bull market. We're going to have a great economy into 2024, probably going to have a great economy into 2028, and we're going to have a very good bull market. I'm convinced this bull market has a lot more to go. I still think it's going to double from that 2019 close for the major stock indexes. Okay, sorry, this was supposed to be another 2 to 3 minute little flash update, but I just had to throw all this in, and especially since I may not give you much to tomorrow. Anyways, here's a thumbs up that the market's going to speed up the next few days. And if it doesn't, yes, it's a concern, but my guess is we're just going to see another mild pullback here in the next couple of weeks. I think this thing is just trying to correct, but it's not really going to get the job done. It's more of a hesitation slowdown on the way up into June to record highs. Manage your risk relative to analysis of others and your own, and past results are not necessarily indicative of future results. And have a great day. Thank you.